Friends, what's up? So, today is a very special day because France is in finals. I normally don't watch football, but I love French team. So, allez les bleus, on va gagner. What do we talk about at a day like this or any day? Inflation. So, that's what we're going to talk about. Let's go, guys. So, why are we talking about inflation? Because we have one and only one question: when the market will bottom, so we can buy at the bottom of the market and make huge gains. Okay, this is why everyone is waiting for the pivot. That's why everyone is waiting for the U-turn, for the Fed's help and things like this. And we're gonna discuss why these are not the same things. So that's the difference that we're gonna make, which will be very important for the the video, the content which is coming on this video. So guys, Fed is making a pivot when there is a first increase in the interest rates. Decrease. When the interest rates stabilize and then the first time they go down, that's what we call a pivot. Okay, that's number one. Number two. Let's press these guys. So number two, check the ambiance a little bit. So that's number one. Number two, the U-turn is when Fed is saying, okay guys, right now we will help the market, we will bail the market basically. Okay, so usually the U-turn is happening when we are at the bottom of the market. So basically what happens is that the market crashes so bad that Fed says, oh my God, everything is going to hell, we have to bail the market. And that's when they make the U-turn by saying that we will help the market inject liquidity, funds and things like this. Okay, so is the market pivot or the market or the Fed U-turn is going to happen? That is the question we need to address. For this, we have parameters. So number one parameter is the inflation. Очень быстро идем. Is the inflation. Слишком медленно. We're trying to find the speed because I'm running here, guys. I'm running out of my breath. So the number one question is, what is happening with the inflation right now? Let's see. The Federal Reserve on 14th of December, it was a Thursday I believe, told us that the inflation is still positive but coming down. Remember that inflation is composed of the core inflation. So the core inflation is everything which doesn't include food and energy. In the core inflation, 40% of the core inflation is housing, guys. And that's why we're going to talk about housing right now, because it's one of the only parameters in the core inflation which takes up 40% of the core inflation. So it's one of the most important parameters of the core inflation. And let's see what is going on with this parameter. So Fed told us that we are 0.4 or 0.5 up in this housing, basically in this housing number. So we're about at 70% annualized rate. Okay, then I watched some videos with Jeremy from the Wharton University. He was their university for 40 years. Okay, Jeremy Siegel, and he said that Fed is using some kind of old lagged data. Okay, and they have to use, not that they have to use, but he did his own independent study on the Zillow, on the other like retail and housing numbers. And you know what he found out, guys? He found out that the housing retail numbers are actually going down in the month of November and in the month of September. So basically, your housing numbers are going down for a second consecutive month already, which represents 40% of your core inflation, basically telling you that your core inflation is negative and not positive as the Fed is telling you. So what can we say? We can see if this is true, and I don't see why it wouldn't be, because Jeremy Siegel did his own study on the numbers. It's not something subjective. It's super practical. It's numbers basically. So I think that if this is the case, and once again, I don't see why it wouldn't be the case, your core inflation is already negative for a second consecutive month, and the Fed doesn't see it because they use the lag information on not only housing and core inflation, but others parameters as well. So basically, Fed right now, by using the lag numbers, is creating a huge arbitrage, and possibly, as they said, and that's why the market crashed all week, is because they said that they are not going to decrease interest rates in the year of 2023. So next year, they said they will not touch the interest rates at all, and that's why the market just collapsed. In my opinion, knowing that there's this arbitrage of Jeremy Siegel, I think that Fed is talking down the market. Why is he doing that? Because number one, they want to see the lag come in. Number two, they want to see the lag come in without putting the interest rates up. Okay? Because by putting the interest rates up, okay, check this out, guys. That's how Champs-Élysées is preparing for the French games. Pretty wild. The game starts in 1 hour and 20 minutes. I'm sorry to mix the two, but that's my two passions: inflation and football. French team football, not like football in general. Anyways, I think as a long-term investor, and it's not financial advice, but that's what I'm doing, I am buying right now approximately 1/3 to 50% of all funds, of all investments, because I think when the market turns, basically it already turned, but Fed doesn't see it. They're talking down the market not to increase interest rates, further increase interest rates, which is a good thing. And after, I think that they will probably do a 25 deep raise. After, they will hodl, okay? And they will wait for probably 2 months. So like in 4 months, I think that they will see this inflation lag that Jeremy Siegel was talking about, and they will see that inflation is just super crashing and probably will even go into a deflation. And that is the moment where the pivot will not only become the pivot, guys, but it will become a U-turn. I think that both will consolidate. So basically you will have the pivot because Fed will decrease the interest rates very quickly, and probably this decrease will be so fast if they crush the economy and if there will be a super big crisis, that they will be talking up the market, saying that we will put liquidity in the market if we have to. Basically do the bailing out, and bailing out is the U-turn. The old, basically, meaning of the U-turn. The new meaning of the U-turn is when we have the pivot, basically. So pivot we will get, that's for sure. But Fed is telling us that pivot will happen in 2024. I think that it will happen, and let's see how well this video ages. I think that it will happen in the second quarter of 2023. And then the markets will run. But as time passes, market will price this pivot, and as soon as they price this pivot, I think that S&P will go up 20%, and stocks like Tesla will go up probably 40, 50, 60%. That's why right now is a very good time, not a financial advice, I'm just saying what I'm doing, to buy stocks. And that's exactly what I'm doing for Tesla. I'm buying Tesla. I bought Tesla before. For my new position, I'm averaged at $210 approximately. Now I'm buying at 150. Possibly they will go down to 100. Then I will buy even more at 100. And if they go down at 50, which is highly impossible but probable, I mean right now everything is probable, then I think that I mean it is possible that Tesla goes down like 50 to $50. Before I would say that's impossible, but right now I think that it is possible, because for Tesla there's, you know, a perfect storm that has been created, and that perfect storm is the following. So basically we have Elon talking shit, okay, on Twitter, which people don't like. Then we have a demand or not a demand problem in China, which we will see, okay? So that's macro and micro. I'm sorry, that's micro and micro. And then we have the macro, is that we are probably going into a crisis. Okay, and that's macro, because we're going into a crisis, because of the interest rates are rising, and the Fed is, you know, creating this arbitrage by not reading basically the situation and taking, maybe because they were afraid before, because they said that inflation before was transitory, so they didn't put the rates up at all, where they should have done. But you know, we can always have the should have talk after something already happened. So it's really easy to talk about it after it happened. So anyways, if Jeremy Siegel is right, we are already having a core inflation which is going down for 2 months already, which is good. Okay? And even if it's not, it will go down, and the question is when will we reach the 2%? So basically we are finding ourselves close to the pivot situation. And also remember one thing, that usually market prices the pivot approximately 5 to 6 months in advance, usually. So I think right now, and the year, you know, the second quarters of 2023 I think it will be a very good time for investments, and in 5 years we will say, oh shit, you know, the 2022, 2023 was что там? А?
Рука мерзнет.
Okay. 2023 was a very good opportunity to buy. Okay. After, and I'm finishing because my cameraman and assistant's hand is getting frozen, so I'm finishing up here. But basically, the situation is that the strategy, there are three types of strategy, which I think as a long-term investor, I'm doing, okay? Number one is to average down. Number two is to invest in something you believe in, like 1/3. Like this, you don't miss the opportunity. So you invest 1/3. That's the second strategy, which you do in parallel with the averaging down. So basically, you buy 1/3 of the market. Then you know that you will not miss the train, basically. And then in terms of market going down, you invest by averaging down. And third is you wait for this pivot, you know, for this bottom of the market, and the perception of the market, which, you know, knowing that this will be the bottom market and pricing it, you're waiting for this moment to finally make a third, basically, investment. Okay, and that's what in my investment group, for example, a lot of people are saying, you know, then just wait for the bottom, you know, just wait for the bottom. Yes, but we don't know where the bottom is, so that's why you do the three strategies. And I think overall, if you do the three strategies and you invest in companies which have PP, pricing power, okay, like Apple, we were in Apple just now, wow, you know, it's like everyone is buying stuff. Of course, it's December, it's before Christmas, before the New Year, but still. So basically, that's it, guys. I would say that 2023 will be a good year. First half of the year will be probably difficult, but second half of the year we will be getting out from the crisis. And even if that doesn't happen, that will happen in 2024. So, you know, the 6 months, if you look at long term with the strategy of three parameters I just said, in 5 to 10 years you will be super fine. Not financial advice. On va gagner. Allez le bleu. See you, friends.